The regular U.S. stock market session is currently closed. At the close of the last regular trading session on August 4, 2026 at 4 p.m. Eastern Time, Advanced Micro Devices Inc., trading under ticker AMD on NASDAQ, closed at $518.58 per share, representing an increase of 7.00% during regular market hours. In extended after-hours trading following its second quarter fiscal 2026 financial release, the stock experienced a pullback, trading down near $473 as market participants processed forward guidance and shifting enterprise infrastructure demand. Wall Street expected a simple continuation of momentum driving immediate price expansion, but the reality on the tape reveals a complex environment where hardware revenue growth must be balanced against margin targets and heavy capital investments. Most retail investors logging into their Robinhood app or opening their Fidelity brokerage account saw the regular session surge and assumed the technology rally would continue unabated. However, the immediate after-hours reaction caught many off guard, demonstrating that hitting top-line revenue forecasts is no longer enough when institutional investors scrutinize structural expenses and customer concentration. The primary narrative surrounding Advanced Micro Devices Inc. has been built on a clear expectation. As enterprise data centers expand, AMD will capture a substantial share of global hardware spending alongside NVIDIA stock, solidifying its market valuation. Millions of individual investors using digital platforms such as SoFi Invest, Interactive Brokers, and Schwab Intelligent Portfolios have bought into this growth thesis, generating substantial daily trading volume across standard brokerage accounts. Yet when you analyze the financial operational details, the reality presents a more nuanced picture. While data center revenue doubled year over year, overall profitability metrics and customer delivery schedules leave little room for execution errors. Retail traders using Robinhood stock trading tools often focus primarily on headline earnings per share, whereas institutional desks operating through the Interactive Brokers platform pay strict attention to gross margin sustainability and foundry cost allocation. This divergence between retail enthusiasm and institutional risk management forms the core dynamic governing current price movements. Leading up to the recent earnings release, Advanced Micro Devices Inc. demonstrated notable price swings across multiple trading sessions. The stock moved from a mid-July high near $580 down to a trough near $430 before recovering into the $518 range during regular market hours. Daily trading volume surged well beyond its typical average of 33 million shares, exceeding 48 million shares as institutional managers and short-term traders adjusted their positions. Technical indicators showed the stock consolidating directly around its 50-day and 200-day moving averages prior to the financial announcement. Across popular platforms like Robinhood Investments and SoFi Active Investing, individual market participants were actively accumulating Robinhood fractional shares and call options contracts, anticipating an immediate upside breakout. Concurrently, institutional trading desks utilizing Interactive Brokers stock systems were actively hedging downside risk through complex option strategies. This interplay between retail accumulation and institutional protection directly explains why early session momentum shifted during post-market hours. To evaluate where Advanced Micro Devices Inc. stands today, it is helpful to place its market movement alongside other major technology leaders such as NVIDIA stock, Apple stock, and Tesla stock. High-performance technology equities have consistently drawn substantial capital flows through Fidelity ETFs, Fidelity mutual funds, and automated portfolio management services like SoFi Robo-Advisor or Intelligent Portfolios. When individual investors search for effective online investment opportunities or seek comprehensive investment help on leading investing sites, AMD is routinely highlighted as a key holdings candidate. However, unlike consumer hardware producers, AMD operates in an industry characterized by fast architecture cycles and intense capital requirements. While Apple stock relies on internal silicon integration for consumer electronics and Tesla stock builds specialized compute arrays for autonomous systems, AMD must continually compete across both server infrastructure and client desktop markets. For anyone managing an individual brokerage portfolio or tracking assets via the Fidelity mobile app, evaluating this competitive positioning is essential for long-term capital allocation. Before examining the underlying business architecture, I want to ask for your perspective. Comment below how many shares of Advanced Micro Devices Inc. you currently hold in your portfolio, and whether you view this recent price adjustment as an entry opportunity or a reason to wait. Turning to the official second quarter fiscal 2026 financial report, AMD delivered revenue of $11.3 billion, surpassing average consensus estimates, with adjusted earnings per share landing at $1.61. Data center revenue showed significant strength, expanding more than 100% year-over-year, driven by expanding adoption of Instinct series accelerators and EPYC server microprocessors. At the same time, performance across the client segment and gaming divisions reflected more modest growth, illustrating that consumer PC demand remains variable. While self-investing individuals using SoFi stocks or Fidelity Wealth Management services focus on macro growth potential, institutional analysts on the Interactive Brokers platform focused on non-GAAP gross margins, which held near 56%. From an operational standpoint, Advanced Micro Devices Inc. develops advanced microprocessors, graphics processing units, and adaptive silicon solutions for data center, enterprise, and personal computing markets. Operating under a fabless business model, the company focuses internal resources on design and software architecture while contracting physical manufacturing to commercial semiconductor foundries. Its primary product catalog includes Ryzen processors for personal computers, Radeon graphics solutions for workstations and gaming systems, EPYC microprocessors for cloud enterprise servers, and Versal adaptive products integrated through its acquisition of Xilinx. Over the past decade, under the leadership of Chair and CEO Lisa Su, AMD executed a notable operational restructuring, transitioning towards modular chiplet architectures. This strategic shift enabled the company to capture meaningful market share in the x86 enterprise server space. Investors who utilized Fidelity IRAs or Robinhood cash management yields to fund early allocations saw significant returns as the firm expanded its overall market footprint. Looking forward, the growth trajectory for Advanced Micro Devices Inc. will depend heavily on its ability to execute hardware production roadmaps and expand enterprise software ecosystems. Market consensus frequently assumes that enterprise compute spending will expand indefinitely, creating an environment where top-tier hardware suppliers capture sustained growth. However, the operational reality is that major cloud service providers are actively diversifying their vendor relationships while building custom internal hardware solutions. AMD must consistently demonstrate that its hardware chips provide superior compute efficiency and lower overall total cost of ownership to secure long-term client commitments. Important future catalysts include the deployment of next-generation accelerator platforms, expanded software compatibility for open-source frameworks, and steady replacement cycles in enterprise commercial PCs. For investors monitoring accounts via Interactive Brokers fee structures or utilizing broad investment help resources across major finance portals, tracking enterprise market share trends will offer far greater value than monitoring day-to-day price fluctuations. Every investment thesis involving advanced technology companies carries clear structural risks that require careful evaluation. AMD currently trades at an elevated valuation multiple relative to trailing earnings, which means current market prices already reflect aggressive future growth projections. At these levels, minor operational delays, supply chain adjustments, or conservative revenue guidance can trigger substantial price volatility, as evidenced in recent trading sessions. In addition, shifts in global enterprise IT spending, supply chain costs, and broader macroeconomic conditions introduce persistent market risk. Individuals using digital tools to invest online via SoFi Invest, Robinhood, or the Fidelity trading platform must carefully assess how such volatility fits into their overarching portfolio strategy. Whether you maintain self-investing strategies through SoFi Active Investing, hold broad index allocations within Fidelity brokerage accounts, or utilize automated rebalancing through Schwab Intelligent Portfolios, maintaining long-term discipline requires looking beyond short-term headlines to assess fundamental business performance. In conclusion, recent market activity surrounding Advanced Micro Devices Inc. illustrates the ongoing dynamic between market expectations